Hey, everyone, welcome to my channel, Smart Money Moves, where I'll give you the tools to make smart money moves. On this channel, I teach you future trading, I teach you stocks, I teach you Bitcoin, which is actually a cryptocurrency in the blockchain. I teach you banking and finance, and I teach you a little bit of real estate. If you're beginning to build your portfolio, this channel is for you. Get your drip right, little Gucci hat. You know the Gucci glasses. But I'll give you the tools to make smart money moves on this channel called Smart Money Moves. Now today I got a very beautiful video for you. If you're in the beginning stages or even if you're advanced in the game, this video is for you. So tap in. We're going to get into stocks. We're going to get into Bitcoin, cryptocurrency. We're going to get into future trading in futures, the S&P 500, NASDAQ, the Big Boy, Dow Jones. We're going to get into all of that. And this video is for you. If you want to get to the 8, 9, and 10 figure bags, you know what I mean? Get you some money. Build you a generational wealth. This channel is for you. Tap in. Subscribe to the channel. Make sure to like and share. All right, we're going to get to the video. Okay. Briefly, in part 1 of this video, I would like to explain to you what stocks are, and I'd also like to discuss ownership and shares in a company. Ownership versus shares in a company. So let's get into that. Okay, what are stocks? Stocks, in simple terms, represent ownership within a company. When you purchase stocks, you purchase partial ownership within a company. And when you do this, if the company does well, that makes the stock rise and you do well as well. You can do well through rising stock prices or dividends. Dividends are portions of the benefits that are given to shareholders. Are two kinds of stocks: common stocks and preferred stocks. What are common stocks? Common stocks give you voting rights on a company's decision, and it also gives you much possibilities in dividends. Now, the difference between common stocks and preferred stocks, you don't have voting rights. But on the other hand, this means that people with preferred stocks, they get paid out up front if the company makes a profit. Now, stocks are traded on exchanges such as the New York Stock Exchange or the NASDAQ. This is where people come together and do trading. Prices of stocks fluctuate on supply and demand. Once again, the prices of stocks fluctuate on supply and demand. Now, this is controlled or influenced by various factors like company performance. Company performance is very important. Market trends is very essential. And also economic conditions. So it's 3 key factors. It's market trends, company performance, and economic. Trading stocks can be an effective way to increase your wealth. but you have to understand key factors on trading stocks. Stocks performance can fluctuate, volatility. I mean, it gets really violent how the stocks can go. They can be go on up, and it can just go down fast, or it can be going down, it can just go up fast. And that factor depends on how you invest. Is why it is very essential for every one of you to understand risk management. Risk management is a very key factor when trading stocks. Now that we've talked about stocks, let's talk about stockbrokers and the role of stockbrokers. Stockbrokers are intermediaries between the buyer and the stock market. So what they do is they are companies that have brokers that arrange you buying stocks. So I'm going to tell you what type of stocks you can buy and how to buy them. The brokers, they facilitate the buying and the selling on your behalf. So if you go to a stockbroker, and I don't want to give nobody no free plug like Charles Schwab or Smith and Barney or different brokers, they're going to facilitate the buying and selling of stocks on your behalf. Now, you can go through typical brokers or online brokers, but typical brokers usually give you advice on their behalf. You understand? Because they have personalized relationships with you. So they give you advice on their behalf. And online brokers charge you a fee. Another benefit of having a personalized broker is that when complications or complexities happen within the New York Stock Exchange, they'll be there to address the situation. You understand what I'm saying to you? So it's different because they can handle more complex situations more rapidly than online brokers. Using a broker, decide whether you want to go with a traditional broker or a personalized broker service. An online broker or ease of lower fees with an online broker. Research brokers and then make a decision. Once you've chosen a broker, now you'll have to open up an account. And once you open up an account, they'll need your financial information, and they'll almost always need your social security number. So opening up an account once you found a broker, that'll be what you'll do first. And they'll need your financial information, your personal information, and your social security number. Once your account is all set up, you'll need to deposit money. You can do this through your bank account, or you can do it through electronic transfer. But once you set up your account, you'll need to deposit money. That will be the next step for you to do. Now that you have your account all set up and you have money in your account, you need to research what stocks you want to buy before buying the stocks. So research the companies, research the stocks, look at their performance, look at the industry trends, and also look at other factors that might influence stock prices. Once again, once you have money into your account and you have your account hooked up, then research stocks, research stock prices, research the company's performance, the industry trends, and other factors that influence stock prices. Let's get into market orders because you need to place an order, right? So you get into market orders. Market orders, buy or sell a stock immediately at the best available price. Now, market orders, they buy or sell a stock at the best available price. Limit order. What is a limit order? A limit order sets a specific price at which you buy or sell a stock at a specific and exclusive time. The stock reaches that price, then they buy or sell. A limited stock sets a specific price at which you want to buy or sell a stock. If an executive stock reaches that price, then that's the price it stops at. Parts to investing in stocks. Here are some of my tips for you beginners. Start with index funds or NTFs. Start with index funds or funds with NTFs. Diversify your portfolio. Mitigate your risk. So what I'm saying is get different stocks. They got penny stocks. They got different stocks. Like, I want to shout nobody's stocks out. AT&T, Apple. See, if you get index funds is going to be like a whole bunch of stocks like McDonald's, AT&T, Apple, Microsoft. It's going to be stocks that's always going up, and you're going to be in like a safe space, a safer space than you would be as far as messing with other stocks when you don't really have knowledge on the companies or how the stocks fluctuate or how the market even is volatile. So you have to have risk mitigation. So mitigate your risk. You know that this is real money you playing with. So play smart. And that's why this channel, Smart Money Moves, I give you the tools to make smart money moves. Okay, we're going to get into sign up. That we got into that. Make sure you hit this thumbs up button. We're going to get into future trading. Okay, what is future trading? Future trading involves buying and selling contracts for delivery of assets at a predetermined price at a date in the future. These contracts depend on based on commodities, currencies, stocks, indexes. It allows the trader to speculate on the price movement of the underlying asset while actually not owning them. So this is what future trading is about. For those in the back, I'll say it for you again. All right. Future trading involves buying and selling commodities or buying and selling contracts for the delivery of an asset on a predetermined price, date in the future. These commodities can be based on commodities, currency, stocks, indexes. It allows the trader to speculate on the price movement of the underlying asset without actually owning them. And that's what future trading is. Subscribe to the channel Smart Money Moves. Make sure you hit this thumbs up button. And our logo is the thinking man. I don't have it up now, but the logo is the thinking man and woman, because the thinking man and woman going to outthink these other people, and we're going to build generational wealth. So if you want to get 6, 7, 8, and 9, 10 figure bags, tap into this channel. Like and share this video. Continuing on. Let's talk about future contracts. A future contract is an agreement between two parties, the buyer and the seller. The buyer agrees to purchase an asset, and the seller agrees to deliver the asset in a future date. Once again, future contracts is a future contract agreement between two parties, the buyer and the seller. The buyer agrees to purchase an asset and the seller agrees to deliver the asset on a future date. I'm going to speak upon underlying assets. These can include commodities like oil, gold, financial instruments like stocks, indexes, and currencies. Underlying assets, these can include commodities like oil, like gold, future. Once again, underlying assets, these include commodities like oil, like gold, financial instruments like stocks, index, and other currencies. Let's talk about leverage. Leverage. Future trading allows traders to use leverage, meaning they can control a large position with a smaller amount of capital. This can amplify potential profits, but also increase risk. Now let's talk about leverage again. Leverage, future traders allows traders to use leverage, meaning they can leverage large positions with small amounts of capital. This can amplify potential profit, but also can increase the risk. Now we're going to get into margins. Margins. To trade futures, you need to maintain a margin account. This is a deposit required to cover potential losses of your position. It is typically a fraction of a contract of the total value. In future trading, you need to maintain a margin account. This is the deposit that is required to cover potential losses of your position. It is typically a fraction of the contract's total value. Hey, feel me, pay attention. Now I'm going to get into the benefits of future trading. Hedging. Hedging futures can be used hedging tools to protect against price fluctuations. For example, a farmer might set future contracts to look in on prices of their crops. Okay, liquidity. Liquidity, future markets are often ways of liquid, meaning traders can either exit position easily. This makes it easy to execute trades quickly. Diversification. Futures allow traders to diversify portions from different asset classes without needing to physically hold the underlying asset. Profits and risks of the falling market. Traders can go long and buy if they believe that the price will be shorter. They can sell if they think that the price will be allowing for a profit potential in various market conditions. Tactics for future trading. We're going to get into that. Tactics for future trading. Technical analysis. Use charts and technical indicators to analyze historical price movements and find trends that may inform your trading decision. Fundamental analysts understand factors affecting supply and demand of underlying assets. This can include economic reports, weather patterns, in geological conditions and geological events. Risk management. Stop losses offer protection against significant losses. That means if you put a certain price on a stock where you want it to stop, it will stop. And that means you won't lose a lot of money. So set stop losses in order to protect against significant losses. It's critical for your management risk. Give inherent volatile future trading. Position sizing. Determining the right amount of trade based on the amount of size and risk tolerance. Avoid over leveraging. Stay informed. Keep up with good marketing news, updates, factors such as economic changes, significant impact, future prices. In conclusion to this video, I'd like to summarize future trading offers unique opportunities to profit, but risk management should be advised. While potential for high returns exists, it is essential to have a solid understanding of the market, effective strategies, a clear risk management plan, and always remember to do your homework and do your due diligence. This is Lashim Nagar. I wish you all peace and prosperity. Like, share this video. I'll do a part 2 to this. I know I didn't have time to finish it all the way, but we're going to get into the rest of the segment. And y'all study this segment here and remember what I just told you. Risk management. And look, this is the channel, Smart Money Moves, where I'll give you the tools to make smart money moves. On this channel, we teach future trading, stocks, real estate, dividends, cryptocurrency, and much more. Look, I'm going to give y'all a bonus. I'm going to give y'all one of my first videos when I started this channel. And thanks for tapping into the channel. Like, share, give this video a thumbs up. And y'all just tap in with me. I'm going to give y'all a video that's super dope. And y'all just get into this. All right. Peace, y'all. Welcome to my new YouTube channel. It's called Smart Money Moves, where I'll give you the tools to make smart money moves. On this channel, this is for beginners to learn about financial literacy. On this channel, this is a channel where people who are not familiar with financial literacy can become financially literate. On this channel, I will be teaching you the basic fundamentals of stocks. I will give you information about the New York City Stock Exchange. I will also be giving you the difference between liabilities and assets. On this channel, I will also give you the basic banking principles so that you can know how the banking system operates. I also will give you the basic stages of how the blockchain works, and I will get you associated with different Bitcoins. And also on this channel, making smart money moves. This channel, I will also be teaching you future trading, about tradings in the futures. I will teach you about the S&P 500 and the New York City Stock Exchange, the Dow Jones. So just tap into my channel. It's called Smart Money Moves, where I will give you the tools to make smart money moves. So everybody tap into that channel. My name is Lashin Turner. Thank you. Have a good evening. Thank you all for tapping into this YouTube channel. It's called Smart Money Moves. where I'll give you the tools to make smart money moves. On this channel, I teach you future trading, stocks, banking, cryptocurrency, real estate, and more. And right now, it's all free. Look, you'll be able to get your Gucci drip, Gucci glasses, get your drip, polo shirt, just live your life, you feel me? But I'm saying whatever you want in life, cause this I'm just joking around, cause not really because you need money to buy this stuff, but it's like you'll be able to build generational wealth for you and your family by increasing your financial literacy, which is increasing your intellectual properties. I'm the host of this show. I don't want to hold y'all. My name is Lashim the God. It's been a pleasure providing y'all with this information. If I brought you anything that brings you value, give this video a like, and get in the comment section. Ask me any financial questions y'all want to ask me. If I can answer it, I'll answer it. Get into the comment section. Tell me how you like this video, what you got out of this video, and just give this video a thumbs up. Like and share this video. I love y'all. That's why we do this. I'm out of here. And the name of the channel is Smart Money Moves, where I'll give you the tools to make smart money moves. Peace. Stay focused. Get money. You know what I'm saying? Money's financial freedom. Peace, y'all. Last name of God. I'm out. Peace.